you have 30 days where you can't buy a like security. It's called the wash sale rule. Are there any positions I've had for a long time that maybe I want to get rid of? I want to offset some gain.
So for instance, if you invested $10,000 into a security, that's now worth $7,000, so you're down $3,000.
Then you can take a position maybe you've had for 7 years, okay, that has done very well because you've owned it for a long time, and sell some of that for a $20,000 gain, and you can take that gain and offset that loss.
So tax loss harvesting is when you go through your portfolio at the end of the year. If you have to, you're going through, you want to offset gains.
Anything under 30 days, you could buy just an unlike security.
At that point, then you'll buy a similar type of securities.
On the gain side, you can sell that one that has the gain and immediately buy the same thing over again.
If you have more than a $3,000 loss, you can then carry that loss forward to subsequent years. So if you have an investment, for instance, that has lost $6,000 and you sell, you can take a $3,000 deduction this year and then a $3,000 deduction the following year, up to $3,000 per year.
So what you do is you look for underperforming parts of your portfolio and actually sell those at a loss.
So it's a way to get out of an investment that you're not happy with and at the same time affect your tax position in a positive way.
It also has to be like time frame. So you can't take something that's a long-term gain with a short-term loss and offset them. We need to take long-term gain, long-term loss, short-term gain, short-term loss.
If you have a taxable account, a lot of times at the end of the year, these mutual funds or ETFs will throw off capital gains to the holder.
That's a good way for in your non-qualified accounts. So in your brokerage accounts, not in your IRA, not in your Roth IRA, not in your 401k, but in a brokerage account, it's a good way to maybe do some tax savings for the future.
If you have a loss and a gain, so if you have one security that's at a loss and another that's at a gain, you could sell both and potentially realize no taxes, right? So that's essentially tax loss harvesting. If you sell something at a gain, you could then wash that sale with a tax loss.